market session with Surge Trader. Super excited to be here. If you are new here, welcome. My name is Lex. I am one of the trading personalities partnered with Surge. I come in here every Tuesday, Wednesday night, and I make sure that you guys get the education, parts of the education that you need, and then some analysis. So it is a little earlier in the week, just something to keep in mind with my trading style and my trading strategy. I usually love to start looking around, today into Friday. So I'm not as assertive today as I might be on a Thursday, but nonetheless, it's still really nice to watch the market evolve and just see where price is headed. We're going to get in here, go over Forex Factory. It's always important to cover the news. And then we'll go ahead and we'll touch base on the actual charts. I actually haven't even looked at them yet. Yesterday, I was so tied down with other work that I get into. And so I haven't even looked. So I'm excited. Let's see what the market has to give. And let's go ahead and get started. So I'm going to start with Forex Factory, guys, and let's pull it up really quickly so I can show you. So I know for those who return, you probably hear this breakdown every single time, but hearing it one more time is never too bad. So as you can see, guys, on my screen right here, we have forexfactory.com. forexfactory.com. There's plenty of sites, but this is my favorite one for news events. Guys, all I'm doing before the start of my day, before I even get into the market, before I even start to entertain the idea of trading, I like to come in here and I like to see news events. Not because I really care about what's in the folder, but more particularly, I like to see what folder is actually impacting the pair, right? So if I have a red USD folder. Red folder means high impact, guys, but sometimes the market does not move. So just because it's high impact doesn't mean you're always going to get movement. Orange folder is medium impact, and then yellow folder is low impact. So as you can see on Tuesday, December 5th, and guys, this is Eastern time. I'm on the East Coast in the United States. We have a 10 a.m. red folder USD. All right, so that could be great if you're trading AUD USD, Euro USD, GBP USD. These pairs can definitely be affected just because we're having a news release for USD, red folder. Additionally, one of my favorite pairs to trade is AUD pairs. So anytime I see AUD news, I definitely get excited. So we do have 7:30 p.m. AUD news. So we have 10 a.m. USD news, red folder, and then we have 7:30 AUD news, red folder. So guys, when I see these folders coming, I'm really not looking to enter on the folder. I'm really looking to let the folder just drop and release, and then I start to analyze my position. Or if news is coming and I'm already in a trade, then I just simply hold. Nothing changes, I just simply hold. But I'm never just entering on a folder drop because, number one, I love to enter on closed candlesticks. I don't ever enter on an open fluctuating candlestick because I need the data to show me in the candlestick what's happening. So just keep that in mind, guys. So let's go ahead and get into the good stuff, which is definitely the charts. I'm going to stop sharing this screen and let's go back over. And guys, if you have questions as I go along, please drop them in the chat. I haven't done a good job of responding to the chat just because I personally can't see it on my end. So we have a system now where I will definitely be responding to your questions. So if you have questions, if you want me to look at a pair, drop it in here. I would love to take a look for you. But let's get into this, guys. So DXY. I love to start on the DXY. It is called the dollar index, and it will help you build an edge in the market. There's something called correlations in this market. You have a positive correlation and you have negative correlation. So if I am looking at the DXY, and if we just take a look right now, it's bearish, right? I can see new lows for me, new low, and I'm on the higher time frame. I like to hop into my 4 hours and then get down into the nitty gritty. So as you can see, we have a new low, right? And this is my last line of defense. All that means is price can't trade above this level in order to maintain market structure to the downside. All right, it's a very simple concept. I don't want to see price trade above this level. That's it in order to take a trade to the downside. With that being said, if I have a bearish outlook on the dollar index, that means my negatively correlated pairs, which you can look this up on Google and stuff, guys. Negatively correlated pairs to the dollar index would be Euro USD, it'd be GBP USD, it'd be AUD USD, NZD USD. So what that means is when the DXY is going down, those pairs will go up. So they will move inversely. All right, inversely correlated, negatively correlated is the same thing. You will see them move inversely. All right, pairs that move with the DXY, USD Swiss franc, USD CAD, sometimes USD JPY. Most of the time it follows its own little behavior, but again, guys, why not add just easy, things into your strategy that can help you build an edge? That's all this market is geared toward, is finding a way to build an edge, build a case to take a trade in a high probability area, and understanding that you are at risk of losing and you are at reward of winning. All right, so regardless, accept the risk, be cool with the reward, let it play out and see what happens. But two things, guys: you're either gonna have bearish continuation or bullish continuation. And before I even get into analysis, I just want to show you guys, when I get into the markets, guys, the first thing I look for on the 4-hour is a low or a high. So if I print a low and I create a new lower low, simple structure here. This was my previous lower low level of support that is now going to turn into resistance. All right. You might hear, people say flip zone, break and retouch, support turning into resistance, supply and demand. All of this is essentially saying the same thing for support breaking and turning into resistance. So you'll have lower low on here. You'll have your lower low. You'll have your lower high. All right, lower low, lower high. So at this point, price has created another new low. All this is telling me, guys, is that future lows to come, potentially. All right, high probability that future lows are coming. Hardly ever does the market just randomly reverse abruptly after all your confirmations. Once in a blue moon, your confirmations will be there and the trade doesn't play out, but for the most part, you're in good shape. So because I created a new low, it doesn't mean I enter, guys. I don't enter on lows and I don't enter on highs when I'm buying. I want the best price possible, right? So I'm gonna sell off high and I'm gonna buy low, but that means I have to allow price to pull back. All right, you have to be okay with price pulling back. When price pulls back, this is when you start to scope your entry with additional price action confirmations, and then you can continue to take your trade to the downside. But that's essentially what I'm looking for. So my entry areas are boom, boom, and boom. 1, 2, 3. All right, I'm not entering at any lows. All right, always enter at resistance levels. In these videos, not a lot of them. I can't remember what sessions. I've done so many of these at this point that. In some of these sessions, I do share my personal confirmation list that was cultivated over 5 years of trading. So, if you're dedicated to this process, if you really love what you're doing and you're like, I need a set of confirmations that's really helpful, that's really going to keep me patient, methodical in this market, then go flip through my previous recordings on the Surge Trader YouTube and find my confirmations, screenshot them, and master them. You will see that this thing does the same thing over and over. I use the same set of confirmations. I really developed around 3 years. So I'm not going to say for 5 years I've used these confirmations. For 2 solid years I've used them. For 3 years I was like in my learning curve, right? But 5 years later, we're here. So learn your confirmations and stick by your confirmations, and don't leave your confirmation just because it doesn't work one time. That's what happens with a lot of people, is they take one loss, they take 1 or 2 losses with a system that's actually pretty profitable, and because they're not able to psychologically withstand that loss, they start to go run and invest in this education and this education and this education, and before you know it, they have too much information. The only way you should ever invest in more education, guys, I truly believe, is if you already have a system and you're just looking to pick things out to refine. All right, but if you're trying to cultivate your strategy and you're just like running away from the current education because you think more education will fix it, I'm here to tell you it will not fix it. It's going to be your psychology. It's going to be your discipline. It's going to be your habits. It's going to be your psychological strength to withstand losses, because you're going to lose. You're going to lose in this market. It is not a win-win-win market. A lot of the times you'll win, lose, bump some profit off, win. All right, once you get into your flow and really understanding how you want to approach this market. So DXY is printing a new low, guys. Basically what I just broke down. New low, price is pulling back. So I love putting this last line of defense always on my lower highs in a bearish market, because, one second, guys, my cat's playing with this cap over here. She's kicking it to herself. So bearish, all right, new low. I love putting my last line of defense on the lower highs, because this is basically the most important structure, which is, do we break this level or do we trade equal to it or underneath of it? As long as we trade equal to it or underneath of it, the bearish structure means intact. So right now we are in a pullback, right? We're in a bullish pullback, right? Because if I'm in a bearish market, the pullbacks are going to be bullish. If I'm in a bullish market, the pullbacks are going to be bearish. All right, so that's what you're seeing. So if I drop down into the 1 hour time frame, right in here, you can see that we have that high or low. We have a new high, and we're starting to form a new higher low in this area here. So as of right now, guys, our structure in this pullback is still really bullish for the moment. We're not overall bullish, right? We're not big picture bullish. We're just pullback bullish right now. So for me, I'm waiting to see this sort of pattern emerge, and it hasn't yet, so it's a waiting game. I'm waiting to see support levels breaking and turning into resistance levels just like this to head back to these lows, right? Because anytime I'm looking to sell, I want to see support levels breaking. Anytime I'm looking to continue in my 4-hour movement, which is my 4-hour low right here, back to TP is essentially right here. Anytime I have this structure, guys, I need to start to see this. That's why I don't believe in picking the top and trying to predict the start of this pattern. I would love to see one support level break, and there's my scale in. My stop loss is like 10 pips, and I can up my lot size. You know, you risk 300 to make 3,000 kind of thing. So that's my trading style. But right now, DXY is still just pulling back, which means you have to be patient. I have something that I always tell my students that I'll put on the screen, and it's called demanding the data. And what this means to us is essentially, you have control of 3 things in this market. I guess 4. You have control of entry, exit, demanding your data, and your psychology. That's it. Other than that, everything's out of your grabs. So what you have to do is be overly patient. I would rather be reactive than predictive. I'd rather get the data than react to the data than try to predict the data I want to see, right? That becomes a little bit too psychologically uneasy for me. So I just wait, because I have an internal strategy within my higher time frame, which is these movements here. I refer to them as internal breaks. All right, that's my personal thing. And so when I get my internal breaks on these 4-hour movements, then I have entire swings and I got multiple scale-ins. So right now, DXY, there's nothing to do. Right, I'm in this bullish pullback, which means AUD USD is probably bearish. You know, NZD USD is probably falling right now. I haven't even looked, but I can't wait to look with you guys, because this is gonna be great. And I just want to check my phone and make sure I'm not missing questions, because they're gonna come to me. So we're good right now. So guys, drop questions if you have them. But we're gonna go to gold. So gold, let's talk about gold. And we're gonna hop to the 4-hour. Gold just hit a new all-time high, guys. And you know, a lot of people are like, well, why is gold hitting an all-time high? If you guys are familiar with the BRICS nations, the BRICS alliance, Brazil, Russia, India, China, Saudi Arabia, they're some of your most oil-powered countries in the world, plus economies. And so what they've done is they've pulled out of the world reserve currency, which is the dollar, guys. They're no longer using the dollar as their backup, as their just in case. They've pulled out of the world reserve currency, and they're starting to implement their own digital dollar, digital yuan, digital ruby. And so what they're doing with that digital dollar, or not, it wouldn't be a dollar in those countries, it'd be a yuan or it'd be a ruby. They're backing it by gold. All right, so for the first time in a long time, we're seeing a currency, a digital currency. Well, this is the first time ever we've seen a digital currency, but it's not the first time we've seen a currency backed by gold. We used to have the gold standard until we removed it. So now what? And some of you guys might be saying, well, I don't understand. What's the importance of it? Well, guys, the reason why it's so important to have gold backing your currency is because your currency can lose value if something that's not scarce isn't backing it, meaning gold is scarce. There's only so much of it in a world, so it maintains value, and it keeps you from overspending, overprinting your money, right? It holds the value of the money because it can be scarce. When they removed the gold standard from the dollar, nothing was no longer backing it to make sure it maintains its value and to make sure it doesn't be overspent. Well, government removed it, so now what are you seeing? You saw during COVID, trillions of dollars went out, right? The CARE Act was like $1 trillion CARE Act for the economy, right? And you see Biden printing all this money and sending it to Ukraine. This is all a result of not having a valuable asset backing your currency that holds value, all right? So right now we have a basically dollar that doesn't hold value, and countries are picking up on it. And so countries are moving away from our dollar, and they're backing it with gold. It's brilliant, and the United States needs to catch up. So that's why you're seeing gold climb. You're probably like, well, how is gold climbing but the dollar is bearish? Well, that's because at the end of the day, the dollar is a US American currency, all right, that is depleting in value because inflation's so high as a result of government overspending, because we don't have the gold standard to keep our central bank and our Federal Reserve accountable. That's why you're seeing this kind of movement in the market. So it's backing digital currencies in other countries now. So it's maintaining its value behind these currencies. So you're going to see gold go up. And guys, let me tell you, 4 years ago, I said gold would be an all-time high in history. This isn't it. We're just getting started because countries are going to continue to pull out of the dollar, the world reserve currency, and they're going to take gold and back it. Why we're not doing that in the United States, I don't know, but this is why gold is bullish. So at this point in time, we can see there's clearly a new high on gold. There's no reason to try to catch this sell, guys. Stay with the trend. You don't have to catch the counter moves. If you just stay with the trend, you're going to be in good shape. We have a new high, and this was actually our structural previous high right in here. And I might even hop up to daily to see. Let's go 8 hours. There we go. So this was the higher time frame structural high, and you can see, I'm going to delete all this because these are new markups, new day. I called some gold setups last week and they went crazy. All right, so this is technically my 8 hour last line defense. And guys, again, when I mark a zone on a time frame, I respect it on that time frame. So if this zone is pointing out 8 hour structure, I got to respect it on the 8 hour time frame. All right, if this is 15-minute structure here and it breaks, that doesn't mean there's an overall shift in higher time frame movement. If there's a lower time frame break here, we could just be dancing within this higher time frame structure. So you do have to understand that price could come all the way here before returning upwards. But same concept, guys. Right now we're in a bearish pullback. So on the lower time frames, what structure are you bound to see? You're going to see this, all right? You're going to see this, and I don't know how far the pullback's going to go. That's why we have to be ready to adapt and understand what to look for. But in order to get back to this high, and I'll go ahead and mark highs, guys. Anytime horizontal green lines pop on my screen, those are TPs. So what I do want to see, unlike in a bearish market, in order to continue selling, I want to see support levels breaking. In a bullish market, in order to continue buying, I want to see resistance levels breaking and turning to support. Just like this, guys. This is the structure I want to see. All right, understanding higher time frame analysis, projection mixed with lower time frame scale-ins, guys. I mean, your risk to reward, just skyrockets tremendously. Your opportunity to scale in and get multiple positions on one high probability setup, comes to life. So make sure you're patient and you know what you're looking for. I don't need to play every part of this market to be happy in this market. All right, when I can catch these huge swings, guys, I mean, these are salaries within these movements. All right, so be patient and allow price to develop. Right now we broke this little internal 15-minute, 1 hour structure right here, so you can see. Even if you want to just mark that, but that was broken. And mark the screen up your own way. You don't have to do it like me. You don't have to do it like this person. Do it what makes sense to you. But right now you can see we got this like internal 1 hour low. So I'm looking for price to kind of pull back and maybe push a little lower in the meantime. We need a pullback. So that's gold for us right there, guys. Odd Swiss franc caught this. We called this actually together on this call. So you can see it played out and then it reversed. So guys, got to be adaptable. Got to take your profits. Got to move break even. That's what I do, guys. When I enter the market, I usually will have 2 to 3 entries on one setup. I don't trade 3 times. I have 3 entries on one trade. Huge difference. I'm not trading UCAD, Euro USD, GBP USD all at the same time. I'm trading odd Swiss franc, and odd Swiss franc at the same time. Because what that does is I can get into profit on my first entry, and then I can see I'm floating $800, for example, on profit. Well, then when I'm going to take my second scale in, I can risk 400 of the floating equity. And then I'm never touching my principal. And then you move break even, and then you take your profit and leave a runner and move a break even, and it's risk free. All of these things have to be implemented into your trading in order to be a good trader, or you'll just get yourself really lost in here. All right, you need disciplines, you need method, you need process, you need flow. This is another one. So again, guys, we broke this level here. So odd USD is looking like it's creating a new low. We're just in these areas of new lows. New low, pulling back. This one right here is kind of holding this level. I'm sure it's gonna pull back some more. Just gotta be patient. We're not in a good area because we're not. A lot of the pairs I trade all usually correlate. Like odd USD correlates with NZD USD. My odd CAD correlates with odd USD and NZD CAD. Right? My odd Swiss franc correlates with NZD Swiss franc. My USD Swiss franc correlates with my dollar index. So all my pairs basically correlate and are connected in some way. So they're all in the same like aspect of the movement. So we're like in a counter pullback. I don't trade those right now, so I got to be patient. All right, so another pullback. GBP USD probably gonna pull back some more. We don't have any real movement here. We just are in this pullback, but we created a new high. Something to always take note of, guys. Always mark off your new highs. What are you seeing? All right, and there's my 2-hour last line of defense. So I understand, guys, that price could literally, if it felt like it. I'm trying to get this trend line here. It's starting to lag a little bit, guys. For whatever reason, my trading view might be our streaming service we use, but nonetheless, new high, and we need a pullback. All right, so let's go to, this might take a second. All right, what is this? EuroCAD. I called this last week. This was like 100 and something pips in one day. It was insane. It was a crazy sell-off. Let's see this one. And guys, I'm going to go over these again tomorrow. I don't even care about Euro USD right now. It's ugly to me. This is one USD CAD. If we break this 4-hour last line defense, we could see a steeper pullback and some shift in structure. But until then, these levels are the levels that are most important to me. So we just simply have to respect or break. This is one that I'm looking at closely, USD Swiss franc. But again, it's got to hold my levels. So give us a second to load. And this will be the last analysis I do, guys. I'll go over indices tomorrow. It's Tuesday, nothing crazy. Trading views deciding to lag. All right. So here it is, guys. And remember, this is a 1-hour markup. This is not higher time frame 4-hour. This one is literally a 1-hour last line of defense. So what this means, guys, is if price does not respect this last line of defense here, right? If we don't respect here and we break above, then my sells are invalid. But if we hold in between this level and start to push here and actually break this level, I think we could see a nice sell-off into these areas. But again, it's a waiting game. We pull back and we're just bouncing between 2 points right now. If we break this level, bullish continuation. If we break beneath this key structure, this key support level, then we're going to see ourselves down here in some of this TP area. So again, another waiting game, and I'll probably look to take sells off resistance. So I'm patient, right? We still have news at 10 a.m., so no rush here. All right, just remain patient and allow price to develop. But with that being said, guys, I've given you analysis, I've given you some gems, I've given you some economic breakdown of why gold is bullish and how countries are starting to pull out of our dollar currency if you're in the United States. All these things are very important. All these things play into my edge and build my strategy and build the hypothesis of why I should take this. Be educated on the world. Be educated on why things are like this. Don't just walk blindly and just go, oh, okay, inflation's high. Like now I gotta, like, I don't know, just like now I gotta, now I gotta pay $6 for more eggs. Like, no, that should actually be like $6 for eggs. We have problems here. Why do we have problems, and how can I prepare to make sure that my money is utilized to its max capacity in the best way possible without the government just taking all my shit? Simple. All right, be educated about the economy. And I see we have a question that came in here. When do you clear your charts to mark up freshly? So for me, if I ever get back to TP1 or 2, so for example, you can see I caught this trade last week on Friday. I took a trade here and I hit my TP here. As soon as I hit my TP or create my low, all right, or hit my TP or create my high, if I'm in a bullish movement, I then remark my charts. So anytime there's a new high or new low, I just freshly remark, and I put on 2 points, my last line of defense, and really where resistance yet, if we haven't pulled back, and what's the previous lower low, and has it been broken? So all of that is what basically goes into clearing my charts. As soon as I've hit my TP, so let's say price gets all the way down here, then I'm definitely gonna clear my charts and rinse and repeat. And that's how redundant and boring it is. It's like once you hit, rinse, repeat, hit, rinse, repeat, hit, rinse, repeat. That's it. And You don't want to keep the markings on from the previous analysis of your trade that's hit your profit because it's probably hit a new high or an equal high, right? You want to take your markups off and give your eye a second. You'll see that when you guys come in on these live calls, I change the colors on my candlesticks, or not even my candlesticks as much as my background, because I like to keep my eye fresh. For whatever reason, psychologically, I'm fresher when I come in the market sometimes and I change the color of my chart and I remark. It's just something I do. My students, some of them do it too. And you'll see that it's whatever works for you. You don't have to do what QBanks does. You don't have to do what Lambo Raoul does, FX Alex G. You do what you do. Take the gems, take the knowledge, take the hard lessons and the knowledge we're giving to you from the hard L's we've taken and try to apply it, all right? But put your twist on it. But the one thing that we all have in common that have traded successfully and are now teaching and watching other people use their systems is that we utilize solid risk management, all right? You don't go blow your account. You don't go risk your whole $50,000. If you have $50,000 in an account, you risk maybe $1,000 on a trade, and even that's kind of high. 500 would be, I think, 1%. All right, so make sure you're respecting that, guys. Keep yourself disciplined. But with that being said, I do got to get into some other work. I love getting in here at 8:30. People have told me that they've been able to catch these calls now before work, before leaving. So that's what we're here to do. Nothing really happening. You can see USD Swiss francs not even really moving. So we are in Q4. We are also in December. So guys, volatility starts to change a little bit. It's not as volatile as your prime working months because people are on vacations. People aren't trading and putting money. Every time you win, somebody's losing. All right, so every time you win, there's somebody on the other side who has lost money. So that balance is a little bit different. So volatility is impacted. So you have to be patient. It's not risk blowing your account, guys. If you got to take the most high probability setups, not until January, then that's what you have to do as a trader. Be disciplined, journal, trading plan. Journal is where you reflect after your trading week. How was my psychology? How was my technical approach? What do I need to do better? All that goes into a trading journal. A trading plan is actually your disciplines when you're in it. What are my confirmations? What's my exit criteria, entry criteria, my risk management criteria? What's my pre-game routine? What's my post-game routine? That's just as important. I've seen people just make money and then try to go do it again in the same day. My post-game routine says you make money, just leave, you're done. You should be done for the week. And I'm trying to do better on that. And I'll make 3,000 in a week, and because I'm still trying to figure that part of myself out, I'll come out with 2,500 because I decided to go trade again. But in my trading plan, it tells me to just be done for the week because you make the most. So that's something this week I'm really focused on. If I make my profit, I'm just done. If I lose twice, I'm done for the week as well. I like to just reset. It's not worth it. If with my strategy and how long I've refined it, back tested it, watched people other use it. If I've poked at the market twice on one pair and I haven't seen my result, or I haven't seen a push away from my entry, or just seen me going to profit, then I know that's probably not a good currency pair to be trading right now because my system is solid. All right, and that's the kind of belief you have to have in what you have going on in the markets. But with that being said, guys, I'm gonna get out of here. Peace, love, blessings. Go be kind to someone. Be good to yourself. Do the right thing when no one's looking, and just go practice. And don't worry about the profits. They'll come. Process, and the rest will flow in and follow through. But until tomorrow morning at 8:30, guys, I will catch you until next time. Peace.